as those cost centers now, this is their valid point where you can now measure their performance. Cost center is a complete accounting system on this phone, almost independent of other entries. So it has a trial balance, it has ledger, but all those things they are not really. They can call it a virtual account because there is other things that you do that you give rise to it. So actually, you can view the cost center account. This is the trial balance. These are the entries. You can see adult fish. This is just the entries I have made. That's why you're seeing these figures. Around the entries, you won't be able to see all this. These entries I just have made to test how it's working. I follow you now. And this cost center, I think it will be very valuable to them. You can say, so you have a ledger, has cost center summary by standard. You have all smoothly, all this. But these are all reports that you can have monthly summary, cost center, account summary, cost that all this, as I told, it's just like a complete accounting system on this phone, but it deals with the unique cost centers as it is. For example, you can even go columnar. For example, if you go on columnar accounting, you can bring all the cost centers in a columnar form. Let's see, all cost centers, okay. Cost centers. See now. See, this is the cost center. Then this is cost center. This will be their summary. This is sales. This is sales. Then we can do the cost element as well. You can do the cost element. This is sales. So you can do this is sales. You can match cost against revenue. That's what I want to bring out. You can match cost against revenue. So this is a part of the report that I can level them. But that's outside that again. It doesn't remove us from the traditional overall overview, total view of the company. I follow you now.
Yes,
now you have your final account where you have profit loss account. This is profit loss account that will now give you the overall view. This is normal profit loss account that we have to now. So this one now will now give, apart from all those measurements that we have, just this one will give you that whether total purchase will not go here. You will not see poultry, you will not see anything here, just total purchase. This is a total stock. This will give you total sales. But if you click on total sales, you'll be able to see what and what we sold to give rise to that. Are you following now?
Yes.
So this is just total, and then we'll give you whether the company has made a profit or not in the main company. After using your other the cost center to measure the performance of each cost center, the performance of the poultry, performance of the piggery, performance of the ranch, performance of the vegetables, and performance of the rodents and snails if they are doing snails farming. So all the other you can now all of them combined together will now come to personal account. Then after that, we now view also we also do the balance sheet. Balance sheet. We have something like this balance sheet. They will also view their balance sheet. Their balance sheet. Balance sheet. Balance sheet is a summary of account.
Yes.
Here now we know how much are we going to, how much we are owing us, and all the rest of it. What of our assets, and what is the value of our assets, and what of all of them will now come to.
Okay. So that means you can capture fixed assets.
Oh, definitely. The only difference here is that when we talk of fixed assets, it goes beyond this one. Every accounting software should be able to cancel. If a person who customizes it knows what to do. Are you following now?
Yeah.
If a person knows how to customize, every account software can be able to capture fixed assets. So we can. But the important is that the revenue account is properly taken care of. Even I don't even show you the personal account, what we call personal account, like customers. Is there. We can have customer there. We can also have our suppliers. We have a government account like so now this is the other thing that they might. This is bank account that is there already. I use Keystone as this. Then, of course, we have government accounts. These ones are government accounts. They have to pay, the staff will pay a tax. The company will pay tax. And any business, anybody who is establishing business in Nigeria with up to four employees must enroll for Nigerian health insurance, must enroll for pension, must enroll for national housing fund. This is compulsory. So all these things, you need to, a person who is configuring should be able to have idea about the legal requirements of the business. Because in agriculture, the thing is more of a direct cost. There are few administrative costs, but mostly a direct cost. Like trash and mess, they are used to is like a security for your farm. I follow you now.
Yes.
Now you have a uniform and protect materials for your staff. I follow you now. It's like direct cost. They have veterinary services who will come and administer all direct expenses, mostly direct expenses. But the person who will not know all these things wouldn't know what is it. How you're packaging. They need to package the egg. They need to prepare the pig. They need to prepare whatever before they say that they will bath them, make sure they are neat. All these things, they are all direct costs. If you want to sell a pig, you must bath it, and it must be so that you appear neat. Then, if you want to sell cow, you must put it in order. All those things. When you want to sell your chicken, you must put the chicken. If you want to sell the egg, you must package the egg inside the egg cress. Are you following? All these things, they are all things that you need to. The other things that are more of direct costs. Then you have other general overhead. For example, if the rented place, person has to pay rent. Parent, if it's a land that you rented the land, you have to pay rent for the land. And when you pay that, you now have to apportion, what you call apportionment. You have to apportion it, and that is where the cost center comes in. Because when you now rent your land and you want to determine how much of the land, cost of land will go to poultry, how much cost of land will go to piggery, how much cost of land will go to vegetable cultivation, how much of the land cost will go to, because you rented is the rent, is a revenue. It's not like a fixed asset. But if you constructed your farm, you own the land, then in that case, that cost doesn't come in. It's part of your asset. So it goes to asset per se. Do you understand now?
If they want to start sales, for instance, now, they will go on that transaction.
Yes, want to say okay, want to say okay, want to go sales. You say no, no. For example, this is sales now. Let me see the sales I made. I think I made this. This is the sales. What they say here, X. See it now. Okay. This is X. You see X. You can say your people. See adult. All these are the sales. You see the dough. You want to say those. That's you want to say the peak, the small. Maybe if one is another, they decide to set it up. So all these things they can sell. Even their feed. See here, this is feed, but you don't sell feed. But suppose you want to dispose of your feed, you have it too much. You want to sell, you can still sell. So they are all part of your items. Are you following? You have fertilizer. Fertilizer is actually a cost. The consumables, but then suppose you have too much, you want to sell to other farmers, you can still sell it. I follow you. Otherwise, you purchase them. Anything you purchase is sellable. You understand now? So that's it. So if you
let's say they purchase if they want to purchase maybe the doors and all of that.
It's still the same approach. Yeah, it's an approach. We got purchase. I think I made a purchase. I think I made a purchase. I made a purchase. Here, I purchased devil sheets. I purchased fish. I purchased fingerlings. I purchased snails. I purchased piglets. I purchased those. These are the purchases. So this is purchase. And they might decide to pay immediately. This is for most of them, they pay cash. You don't want to pay cash. You can give up. You cannot do everything like this. So also the sales as well, they can collect cash. So that is tax is not included in most cases. Farmers don't pay tax anyway. They don't pay tax. But they are giving tax holiday, whatever they call it. I don't know. But if they want to pay tax, they can still charging that. But I think they're giving, they have that. They don't.
So how about the area of transport? How do they capture transport?
Transport is there. Transport is there now. Transport. The is there now. If you want to, this is the access. Normally, transport is there now. Transport is there. If you go to, let me see this again. This is your transport. You want to capture transport. This is it here. This is your freight now.
Okay.
This is the amount of transport. If you transport,
yes,
the sales value will increase. The sales price will increase because of the transportation costs. So it will increase. So that's one thing. That is where so it's always there. But I can change the name to transportation costs. So freight and forwarding is popular with the clearing agents, with imports. So I will use the proper name. But although we have transportation again, this transportation here is not the one we're talking about for delivery. This one is for delivery, but it does not transportation under administration. That one is the one that they now move around to say go errand or go and carry goods and come back, which should be included in the purchase account. We have transportation here. This is indirect. This administrative transportation, moving around, moving around. So, though I can incorporate it the other way as well. I can even default it in the other way as well, so that two of them will merge. But the other transportation I'm talking about, the one that you have in the sales, is the revenue account. This is an expense. Understand now? This is an expense. The other one is revenue because the client is paying for transport, which we are going to add to the person's value of goods that he bought. So that one will increase. That one is like a revenue. And as a farmer, if you are delivering for whatever you pay for your cost may not be the actual transaction cost. Maybe you get it cheaper, but you add your own value to it as normal. It's just business. Do you understand now?